That's a pretty good song to go running to or gym to, actually. Put that in your little cycle list. Alright, boys. Pumped up song, pumped up market. Got a lot of counter trend stuff going on, which is great for those who have missed some of those entries, right? So, in particular, dollar yen's in play. So, dollar yen, our old favorite. Talk about it a lot. We talked about it yesterday. What we really want to be doing here is buying this dip for a couple of reasons. Mainly that there hasn't been any decision made yet. The BOJ, the government over there, MOF, will definitely be noticing the reaction to the lack of specifics, and also the suggestion that this stimulus package is going to be less than, like the 10 trillion. That was sort of like the lower benchmark. And so the market's gone from profit taking to a little bit of dovishness. But really, that mandate was pretty clear that they can do what they want. So I think that the Japanese side will come back with something else soon. And you might see some more rumors come out. They're not going to announce anything firm just yet. But this is the next couple of days. The market's now quite back at the level that you wanted to buy if we got the opportunity. Right now, I didn't really want the market to be down here because it looks like the stimulus package is going to be something like 2 to 6 trillion yen, which is a lot less than the 20 to 30 trillion, which everyone was talking about. But that's fine because the market sometimes goes a little bit more aggressive than you wanted. But there's another way this can rally tomorrow, and that's with the Fed. If the Fed comes in more hawkish than expected, that's another way you get the dollar side starting to rally up there. So it's a pretty fair game here. Pretty big candles on the pullback, pretty sharp pullback. But that's the sort of pullback you want. You don't want a slow pullback. You want this sharp pullback, and you want a V-shaped recovery. So hopefully we're back above 105 during the Asian session tomorrow. That will set us up for a nice rally if the Fed is hawkish. If we're below 104 tomorrow, got to be a little bit more careful. Got to be a little bit more careful. If the BOJ, if the government leaks that are coming out pretty much daily here don't come out with another little comment suggesting that the total stimulus package is going to be a lot higher than what has been spooked around Asia today, then that would be surprising, and would probably see the dollar yen back below 104. But let's not get too bearish too quickly just on one day, right? We wanted a pullback, right? We got a pullback, and now we're a little bit scared because it's looking pretty fast. Sometimes you just got to buy and expect that the reasons that the market was rallying would come back in some form or another. It wasn't official, this 2 to 6 trillion stimulus. That's not official at all. That's just another number that's come out. There has been a fair bit of non-helicopter money talk. That's fine. All right, that was that spike here from 107 down to 105.50. This one is more on the stimulus side. The BOJ can still do something on Friday. If they do nothing, we're going lower. All right, it's a little bit complicated, but I think the best way is to buy the dip off a nice level, and that's what we're doing. All right, we'll see how it plays out. If the market, look, we'll deal with all the contingency plans and what's happening in it as it develops. What we're doing now is just sticking to the trading plan we had, buy the dip, and see what happens next. Hopefully it rallies and we can just have another 500 or 600 points. Alright, so what else is going on? With that dollar yen sell-off, you got a little bit of dollar weakness. So the euro popped back above 1.10. Now initially the pound didn't rally with it. That was mainly on an NPC member coming out saying if we had seen those service PMIs when we were at the BOE, we would have had a different story. So initially at the start of Europe, you got some selling on that comment. That's fine. But then the US dollar weakness was so strong that we did get this relief rally coming through now on the pound, and the stops are pretty close, so we maybe would take out those stops without really changing anything in this pair. The euro, it's not going to get too far. It depends a lot really on this dollar yen, right? If dollar yen gets caught up and you get some US dollar strength coming back, as the dollar yen bounces, say, towards 105, then you're probably going to see the euro roll over and be back below 110. But at the moment, it's just enjoying that weak US dollar. The other pairs which are using this opportunity to rally are the Aussie and the Kiwi. Now, Aussie and the Kiwi, we were hoping for this to happen. All right, we were hoping for a rally, and we've got the rally, and now we're a little bit worried. Right now, we're like, well, what are we doing? Are we selling into this? Now, the plan was to sell her a little bit higher, 75.40 to 75. This was last Friday. We were talking about selling into it. Okay, well, we had to wait a couple of days, and we got this rally. I mean, the data coming out tomorrow is huge for the Aussie. Let's not underestimate how big this is. It's worth up to 100 points each way, maybe up to 200 points on the downside if it comes in a lot weaker than forecast. So this is a number that's shocked. In Q1, it came out at negative 0.2 quarter on quarter. The number we're looking for tomorrow is 0.4. 0.4 still opens the door for them to cut rates. That gives a year-on-year rate of around 1.5%, and the Central Bank of Australia is targeting 2%. All right, so 0.4 is not going to stop them cutting, and 0.4 is not going to give much of a relief rally, if anything at all. 0.3 we get selling, pretty solid selling. 0.2 I think we get very aggressive selling, and anything 0.1 or lower, you're going to get just massive 100, 200 point sell off, right? Because that will open the door to probably two rate cuts. At the moment, though, we are having this relief rally. So we're wanting this relief rally, and we want to sell into it. Where are we going to get in? Just a little bit higher. Where we're going to put our stop? Just above 76. Okay, targeting 73. That's my trade of the week. That's what I want to be holding. I probably want to hold this into the RBA or just before the RBA. All right, so that's the trade plan. Let's have a little look here. So 74 in between this little range here. All right, the Kiwi, it's going a little bit more aggressive on the top side. Okay, that's fine. It does that. Kiwi's, the honey badger, right? Does what it wants. So it was a starter of the selling, right? It started all that negativity, and their CPI was terrible, and the market fell for 3 or 4 days, and it's consolidated. Now it's having a bounce. Fine, that's fine. That doesn't change the fact that if you're taking a view on the Kiwi, you probably want to be selling it, yeah, because come 12th of August, they're looking like they're cutting rates and opening the door to another cut. So that was what all that stuff was from the RBNZ in the last week or so to get the market down. That's what they've been doing. So I'm pretty happy selling some point here in the next 50 pips. I don't really want to be early because it is aggressive, but let's play it by ear. 71. Right. I mean, you can sell a little bit here and then sell a bit more later. Let's do that. Sell a little bit here, sell a little bit later if we get the opportunity. Sell a little bit here, sell a little bit later. Alright, you might not get the later, but then we start to really sell. Then I'll get out the big account and I'll start selling, a standard lot, 2 lots up there. Probably on the Aussie I'd play that. If we get an overextension, I'm getting big. Yeah, dollar yen, I'm in at half lots because it is a little bit dangerous. So, you don't really want to go full-size lots on the dollar yen when it's crashing. Just general rule of thumb. But, yeah, I mean, it's a half position size. So if you trade standard lot usually, then just trade half a lot. But it's both are making, decent money. Well, hopefully, I mean, the Aussie is not yet, but hopefully. I mean, actually, that's a sadistic type of thing. I want the rally so I can get the market, I can get a really nice level. It's like the dollar yen yesterday. We talked about this level yesterday. I want the market to fall so I can get a nice level. Yeah, just 75.80. I'd be pulling the trigger there. It's just, I mean, the market's probably going to fall tomorrow before the RBA anyway. I can lighten up before the CPI anyway, so I can lighten up down there. Oil's still very weak. So there's no real sustainable rally here. And it's the same sort of thing as buying dollar CAD, right? Buying dollar CAD back. Well, let's just see how it pans out. But buying dollar CAD on dips as well, right? That makes sense, yeah. Just got to get a nice level. CAD's actually got a bit more play to catch up to do if the oil does turn. Say oil does one of its $1 rallies, which have been pretty regular in the last few or 4 months. So just random little rallies here that you can get the market to reverse here, then push the dollar CAD maybe back towards 131, 120. You know, then I'd be happy to buy that because I don't think the oil's got the sustained rally in it. And just I want to be long US dollars into the Fed. So, you know, tomorrow's all going to be all about the Fed because the CPI's during the daytime. We're going to be talking about how to get long. Hopefully the dollar yen's just above 105, so we're sitting pretty on that. But then we'll talk about which pair to play catch up with. I'm thinking Kiwi. Or dollar CAD. Hopefully I'm already short Aussie on that, and you know the market's treating us well. But that's the main way I'm looking to play that particular. At the moment, I'm just thinking ahead, right? Still a little ways away. So I'm thinking to short Kiwi tomorrow at some point, or it's next 24 hours to get short at a nice level before the Fed. Alright, let's have a little looky at what other trades we've got going on. So we still got our Aussie Kiwi. It's coming back down a little bit. Kiwi's outpacing the Aussie on the rally. I mean, look, I can close it. It does sort of not make sense to be short Aussie and long Aussie Kiwi at the same time, and considering the timing of this, I actually want to be long Aussie Kiwi just generally. I just don't want to be, you know, I don't mind buying the dip if we get another dip. Alright, so I might actually close that out and look to buy again at the level that we were talking about yesterday, say 105. It's a little bit bigger on that account, isn't it? It's a tiny account. Let's remember our risk management. Here we go. So that, you know, we might get down here just another 130 points on the back of weak CPI and then the RBA cutting. But then, like we talked about yesterday, the market looks forward. So what's the market focused on after the RBA cut? It's focused on the RBNZ cut, which is coming up 10 days later. That's more than enough time for us to get some buying in the Aussie Kiwi underway, and you know, for the technicals to be changed on the way back up. So let's buy that on the dip. What's the other trade here? We're short Kiwi, short Aussie, and long dollar yen. Stocks are being pretty relentless, right? Stocks are being pretty strong here, so they're providing support for the resumption of risk-on trades. It's another reason why Aussie and Kiwi have had this rally. It helps out a little bit via the Aussie yen and the Kiwi yen buying on dips. I mean, I don't know. I mean, the market's in a bit of a funny mood, right? You know, the only thing missing from the perfect concoction for Aussie going down is the stock market. If we can somehow get some stock market selling, that would be fantastic for these trades, for this whole trade idea. Not really good for dollar yen, but good for everything else. Alright. Let's have a look at some of these trades here. I'm going to bring across the trade room into the screen just to do it this way. I don't know why I haven't been doing it like this. What is that noise? Oh, that's my FX book. Let's get out of that. Got like 1,000 tabs up. Sometimes it's hard to see where the noise is coming from. Alright. Is that working okay? Let's take me out of the picture. Alright, so we're in the Forex signals trading room. And we're in the trade area. Above that, I think we do have... Let's not close that button. Who knows what happens if you check yourself inside a stream. You might go into an infinite loop. Oh, let's just check it for fun. Does nothing happen? Freaking me out though. I don't know what I'm looking at anymore. Alright. Let's have a look at some of these trades. We are talking about a long dollar yen. Alright. Now the reason I love this trade is that it looks very similar. Very similar to a trade from a few hours ago that I posted in the room. We're buying around about the same level. Okay. So yeah, of course I love the trade. This is a little bit better view maybe to see what's going on there. The main reason is that we just wanted to be buying the dip at a nice level, and it's bounced up. So, all right, IDEF. I don't know who you are. You're a new member, but you're trading quite well. I've looked at a couple of your trades. Slick is gone long on the oil. No, he's gone short on the oil, and he's kept on selling. He's a monster in the oil game. Let's have a little look though. Oil is having a little bounce, I think, at the start of... No, not really big bounce though, just a tiny little one. Let's go in closer. Alright, so this is still looking pretty good. Still looking pretty good. And Jay, the analyst, short pound. Yeah, I mean, this one was looking great before that reversal. I'm short pound actually, so I'm with you on this. But yeah, I took profit on that initial dip at the start of Europe. So we're talking about this pair. I took profit down here on this sort of action, and I took half profit, sorry. And now I'm running a little loss because I was short just at 130.10. So I might actually end up closing out, break even. Not great. So you probably got stopped out on that one, unless you took profit early. Euro. From Doc Weir. Should spend a bit of time on these little butterfly setups. I'm not the master of these. I want to know the percentages of how often they work. I want to know a little bit on the background of why they work. I mean, look, if they work, they work, right? I just want to know a little bit more on you know, sort of what the repeating pattern is, how to draw them. I mean, I think a lot of these are drawn by machines automatically. So, you know, it's like that pattern recognition software that catches them. I know Potter knows a lot about them. So I'm going to have to get Potter in here on a special little stream interview. He's a member of one of the original harmonics and butterfly communities that generate these sort of signals. But anyway, he went long, and that's worked out for him so far. Okay, the market is a little bit slow in the euro at the moment, so it's not going to be gangbusters for him. But that's interesting nonetheless. Oh, we're getting down short. I mean, let's have a look at his reasoning. Short from Sean. It's just it's a small term scalp, like literally 10 pip scalp, so he's out already. Rabbit is short and got destroyed. Rabbit, what are you doing? Why were you selling that? I mean, the only thing dangerous about this morning, and you could sort of feel it in the market, right, that it's been going sideways for a couple of days, and the lows were starting to get a little bit higher, Rabbit. So when you're trading, and you see the trend is down, right? The trend is down, and that's fine. But when the market stalls and then has a little rally, then another sell-off and a little buy back up, a little higher than the previous low, then comes back up and little low previous high, I mean, then you have to be a little worried that it's at least consolidating, at least stalling, and then there's very little reason for you to be in the market at those levels. Okay, so there was danger signs there. That's all I'm saying. Now, that's easy to sell. That's a little bit harder. Yeah, there's sideways action, but we are getting up to some nice little sell levels. So let's hope that bad boy keeps on heading up. See, all right. So Nick's asking about the Kiwi. So Kiwi's always been a little bit rogue, right? A little bit rogue in terms of how far it moves. So if you remember some of those traders that we've had here in the past, Nick, how it's just gone 200 or 300 points further than everyone wants it to. It's a very low liquidity pair, which means that people do like to manipulate it if they can. I mean, hedge funds can with large orders sort of push it around a little. I mean, the market's pretty heavy short, so probably going after the easy stops. I don't think that they've changed direction. It would surprise me if the low is in on the Kiwi, given the backdrop and the selling that we saw last week. So this is just a normal counter trend rally, and because it's a Kiwi, you can add a little, like 50 to 100 points just on it does whatever hell it wants, right? So look, I'm pretty happy selling here. I wouldn't sell aggressive unless we got another 50 points higher, 71.20. Generally, though, I'm looking to sell the Aussie rather than the Kiwi, because it's got that data coming out much sooner. Yeah, that's really quickly. I mean, this chart doesn't talk about the technicals, right? This chart here, it looks strong, the Aussie. Should have looked at the daily first. But it doesn't tell the story about why the market's moving, right? And the market's moving are based upon a CPI piece of data, which is that day, right? That day there, that started that selling. So that same sort of selling can come through if the data is weak. That was the RBA day. That was the CPI day. Okay. And then you can see how far the market moved on that CPI. That was another 150 pips. And then after the RBA cut, left the door open, got followed through for 200 or 300 pips. So the same sort of thing can happen tomorrow. I mean, it is data, so it is volatile. Australian data is a little bit unreliable, but I still want to be short. Yeah, so don't get freaked out just yet. I mean, freak out because you're heavy short, but don't. I mean, it's not doing something it's never done before. Just hopefully we get some selling coming through soon, right? We should get some selling in sympathy here with. I mean, the sellers should come back in the next 24 hours. If this is a normal counter trend rally. If we're sitting here on Thursday and it's above 72 or 71, 20, there's a problem. Yeah, but it's a scary one to trade. I don't usually trade it, Kiwi. Don't like it. Alright, let's get out of this there. Let's get into a little bit of data. Let's see if anyone's got some answers for you in the interbank world there as to why the Kiwi's gone up so far. Well, this is very negative. This is from BNP Paribas. But yeah, it looks like there's no specific reason for the rally. It's just a straight up counter trend, taking advantage of that sparked by that US dollar weakness from the dollar yen. Alright, so we've got a few reports here to just quickly go through today. This is Deutsche Bank about the CPI tomorrow. Alright, so the CPI tomorrow, it's really going to change the percentage odds of if the RBA is going to cut or not. Alright, so at the moment it's sitting around 60%, and it will quickly go to 90%, or it might go back down to, if it comes in as expectations, it might stay or even fall down a little bit. I mean, look, I think it's actually going to increase no matter what, unless it's weaker than forecast. I think at forecast is still going to be bearish for the Aussie overall. But 6%, you still got that 40% to sort of strengthen. And 40% in a 1% in a normal rate cut mode, right, that's worth about 100 points. Okay, guys, so that final 40% is still got another 100 points to the downside here for the Aussie. The RBA obviously wants the Aussie lower. All right, what are they talking about here? They're also talking about the 10-year yield spread for the US. And the ability for Australia to finance its current account deficit, which is true. We actually, for a country which exports so much iron ore to China, it's ridiculous that we have a current account deficit. We import everything. We're just like a little mini America. We don't make anything here. We don't even sell value-added iron ore, right? We don't sell steel. We should be selling steel to the world, right? But we can't. But we can't do it cost effectively, which is our wages are too high. All right. They're also noting the chance of potential downgrading from S&P over the coming weeks. That would be very negative if that ever happened. And also that their FOMC stance is skewed to the hawkish side, which is something I talked about in the daily market update report today. That the chances of their FOMC being more hawkish than forecast is definitely there. I mean, the ability for the market to start pricing in rate cuts for December is very strong. All right, and then positionally. So positions are basically the only way you can see the positions in the market is via the over there in US, they trade Aussie Australian dollar futures contracts, right? So these futures contracts have a relationship with the spot market, indirectly, but pretty directly, and that it's when you can see sort of what the positioning of the large traders and large hedge funds and large corporates are in the market. Right now, with that data, you can start to see how the market's positioned. You can extrapolate that the rest of the big market, the rest of the longer term market is positioned that way. Now, the only problem with this data is that it comes out a week late. Right? It comes out a week late. So it doesn't really take into account some of the moves. So we didn't really get much of that move, that sell-off in the Aussie last week wasn't really coming through in the latest piece of data. We were going to get that in the next weeks, yeah? So it's a week lagged, so you don't see the big changes. So when we look at this report next week, we'll see a very large change in the IMM report. So just let me remind you to have a look at that next time, okay? Alright, so yeah, they're very bearish on the Aussie. They've got the fundamental reasons. Let's just see how that plays out. US elections. That's probably something we're going to have fun with later on, right? A little bit of fun. A little bit of fun with Trump. It's, who knows what we're going to see in that little 5-month election run-up. We still got 5 months. It's amazing how long they hold the elections for. Alright, so let's have a little look. You want to see what's going on here with Japan. You want to see the real news. This is exactly what happened. It's a good summary. Sometimes I don't express myself completely clearly, but yeah, this is what's happening here in terms of the expectations of what the Ministry of Finance was going to do, and what's happened during today. So the Nikkei is actually not just an index over there in Japan. The Nikkei is also a big newspaper. So don't get confused by that as well when they're talking about a well-informed Nikkei. So the MOF is going to do a 6 trillion rather than 30 trillion. So that's why the dollar yen's under so much pressure. And those who are hoping that there's going to be this helicopter money, really they need the BOJ and the Ministry of Finance to be in it together, right? And with those latest comments coming from ASO, he's he's saying there's like an arm's length between the BOJ, what they do. They're not trying to put pressure on the BOJ. So that was also some comments that came out today. This is something for me to read later. Alright, let's just get some technicals just to finish up the little report today. It's interesting. It's a very good day to trade. I'm going to be quite active tonight, so hopefully we can make some money. Let's just do a little final check here. We better get down to the Kiwi dollar for Nick to find out what's going on there. Where's the technical resistance? Where is the resistance? Yeah. Dollar yen support's been hit. You know, really, we're looking at just those big figures on the top side, that 105 first. Get back above that before we talk about going higher. Pound still no man's land. Dollar Swiss still struggling to get above a 99. We're just waiting upon that one. Aussie. Moving back towards 75.60, capping 76.10. Okay. 200-day moving average down at 73. That's probably my target here for the RBA cut, or bad weak CPI over the next 3 or 4 days. Alright, so the immediate spotlight turns price towards the 38% retracement between 70, 68 and 94. So we don't want to see the Kiwi above 71, Nick. Okay, that's basically what we can take away from this. But yeah, it does just look like a little retracement. It doesn't look like the resumption of the trend. Nothing's changed too much. Those big movements last night in the dollar CAD, we did break that 131.90 level. So far, there hasn't been too much follow through because, you know, the US dollar's got a little bit weaker. But definitely the potential there for a move back towards that 133 to 135 level. Euro yen's another pair that I'm looking to buy, but I'll just be using dollar yen as the measuring stick here. So whenever I look to buy dollar yen, I might buy a little bit of euro yen. And euro pound, we're not really trading right now. All right, so there's a lot of pairs in play. The main one we got to focus on is the Aussie dollar. Hopefully we get some nice levels here today that we can sell into ahead of that CPI number tomorrow. Good stop placement. If the numbers come in weak, we've got that 200 to 300 point move. Alright guys, is there any questions? Alright, we'll finish up then. No problem, Nick. Good luck, mate. I know that it's a bit worrying. Got myself a new computer chair. Going to get that up and running. Hopefully it's a high back so we can... it's quite nice actually. I've used them before, so it should be good. Get that up and running for tomorrow. Got my old beast computer coming back down. My sister's bringing it down for me. So I should have that by Friday, so next week up and running. So things are going to get a little bit upgraded here. No more 2 screens. Yeah, it's about time. Alright boys, have a good weekend. Have a good week. I'll be back tomorrow at 9 GMT. We're going to talk about the RBA and the CPI numbers.